tuned into Midcap Masala, a show where we are deep diving on everything that's happening in the broader end of the market. But time now to get into a corporate conversation and take you through everything that's happening at Capillary Tech India. We have Mr. Anish Reddy, the founder and CEO of the company, who's joining us on the show. Mr. Reddy, hi, morning. Thanks so much for your time. Now, positive news flow coming in for your company. You have recently acquired SessionM from Mastercard. Can you tell us about the strategic trigger for acquiring at this point in time, and how does it accelerate your global loyalty platform ambitions?
Thanks for having me here today. Of course, the SessionM acquisition is a good milestone for the company. We have bought other competing loyalty companies in the past. Of course, buying something from SessionM, buying something from Mastercard is in some senses a vote of confidence on the quality of the company that we've been able to build in Capillary. And SessionM, of course, is one of the top 10-15 companies in the loyalty space globally, with some really good customers. They have 5 of the Fortune 500 as customers. Presence in the US, LATAM, APAC. Multiple markets, right? So it gives us very good access into these markets going forward. It gives us about 40 plus customers, and this is the merchant loyalty side of the Mastercard loyalty business. I mean, they continue to own the banking stack that they have, but I would say it helps us get to 115 million plus in annual recurring revenues, right? So that's well over a 1,100 crores type revenue number that we have visibility to now with this acquisition. Also, it will be fairly EBITDA accretive, because a lot of these customers are good margin, and as we upgrade them to the Capillary platform, you should see the margins flow through.
Right. Mr. Reddy, hi, good morning. This is Ankita also joining in. So how soon do you expect this acquisition to become earnings accretive then?
I think the closing is, we'll close in the next, 3 to 6 months. Integration will probably take, anything between, the starts in about 6-7 months, and then will go on for a couple of years. So you should start seeing at least some EBITDA being delivered from the acquisition next year. And I think in a couple of years, between 24 to 30 months, you will see a full realization of the integration being done and all the margins being delivered. Right, so.
Reddy, you did say that the margins are going to be, they're going to get a fillip from this development. Could you quantify where are you seeing your margins on the back of this? Because from what we understand, you're guiding for 20% plus organic growth and 45% plus free cash flow post this integration. Could you talk to us about how the other numbers play out?
Right. So organic growth has got nothing to do with acquisitions, right? So we've continued to deliver a 20% plus organic growth for the last many years now. In fact, much more than that. And we think we will continue to deliver that going forward. On the acquisition side, what happens is, like today, if you look at the SessionM acquisition or some of the other acquisitions we've done, the first year is usually at a break even, right? And year 2, 3 is when you start delivering margins. This is our 5th acquisition, right? If you think about, and 3 of them are fully integrated. Once we did between 2021 to 2023, they're all fully integrated now. And each of those acquisitions post the migration delivers like a 40-45% free cash, right? So it's a set playbook. We only buy competitors of ours. We don't take product risk. We're not buying new products. In that sense, we are regarded to be the best in the space. So the customers also, it's a big upgrade going from any other platform to us. And that's the thesis, which is why we believe that in a 24 to 30 month period, you will see a full realization of about 40-45% contribution margins from the acquisitions. While that will be a slow ramp up, right? You'll see something next year, you'll see something the year after. On organic, that machine continues to do very well. We yesterday announced signing a large Fortune 50 retailer in the US. It's a $20 million deal for the first 5 years and probably more after that. So the organic machine continues to, build, especially with all the AI momentum that we're seeing in the product and in the space.
Right, Mr. Reddy. Also, AI has been a big risk for the industry recently. How is AI impacting your recurring SaaS revenue model, and how much of an increase in your NRR is being driven by the AI specifically?
I think that's a great question. So, if you look at our competitors, most of our competitors end up being marketing agencies, right? So, and the US is typically, loyalty was born in the marketing space, right? So it was born in these agencies, and they're very inefficient in terms of, ability to get stuff done. A lot of people, big teams to deliver anything, right? While we tend to be a software first and AI first. An AI native product for a lot of use cases, whether it's analytics, whether it's running campaigns, whether it's configuring, your programs, things like that, right? So on a rough basis, if an agency needs about 20, 25 people to run something, you can run the same thing on Capillary with 3, right? So now what that's meant is that more and more large enterprises want to move away from agencies and move to better software, more AI native capabilities, right? So that's really helping us a fair bit. Even in this one, even in this Fortune 50 retailer, they bought the loyalty stack and they bought the AI components, right? So we're also seeing existing customers wanting to do more with us. Like today, we are the loyalty platform for them. They use something else for their Engage tool. They use something else for their analytics. With Aira, we're seeing a lot of these customers saying, look, you're anyway the system of record, so we also want to do the system of engagement and the system of intelligence with Capillary. My gut is, if you take a 2-year view, probably a 15 to 20% incremental contract values, which translates to NRR, should come from the Aira stack.
Does that incrementally give an upside to your growth projections as well in the medium term?
Like obviously we haven't shared our growth projections with anyone, but I think, between the acquisition, some of these customers we're closing and net retention rate, we're definitely better than ahead of what we internally had as our plans, right? So AI, given we're a system of record, AI has been a net benefit for us as a firm.
Reddy, on that note, thank you so much for joining us and giving us color on your way forward for the company. And we'll let you go on that note. And it was a pleasure to have you on the show. But with that, it's time for us to step into a short break. Don't go anywhere. After the break, we'll get you more updates from the broader end of the market. Stay tuned.